The market doesn't whisper anymore. It roars, in bidding wars, shrinking days, and prices that refuse to bend. If you want to see where Massachusetts housing is really heading, trace the numbers running from Boston to the Berkshires to the borders of Connecticut and Rhode Island. Start in the present. Statewide, closed single-family home sales in Massachusetts rose 5.6% year-over-year in October, with 3,921 homes changing hands. The median single-family price reached $660,000 that month, up 2.3% from a year earlier. Condos were a split screen. Closed sales dipped 1.1% in October, but the statewide condo median still climbed to $549,900, a 2.8% increase. Even with the fall chill, the market's pulse didn't fade. Step back 1 month for contrast. In September, closed sales grew 4.8% for single-family homes statewide and 6.4% for condos. The Massachusetts median single-family price in September was $654,500, up 4.7% year-over-year, while the median condo price reached $525,000, rising 1%. Beneath those medians, supply and flow began to shift. New listings ticked up, 7.5% higher for single-family homes and 13.3% higher for condos compared with the prior September. Inventory remained tight, for single-family down 4.2% year-over-year, but condo inventory in September was 5.1% higher than a year earlier. This is what a market in transition looks like: sales reviving, prices edging up, and fresh listings finally trickling in. But this is Massachusetts, where markets carry history in their bones. The real shift started 5 years earlier, and one county tells it with ruthless clarity. In Berkshire County, home sales jumped 20% from 2019 to 2020 as the pandemic ripped open new patterns of work and life. Average prices in the Berkshires didn't just rise, they surged by more than 30% over the same stretch. Then 2021 delivered another climb. Home prices there added 16%. Buyers came for space and safety and stayed for rates in the 3 to 4% range. The result was classic. Inventories choked, leverage swung hard to sellers, and the price of entry leapt town by town, valley by valley. That run-up was never built to last, not at its pace. The pitch shifted as the ultra-low rates receded and newer mortgages spiked. Owners, who had locked in pandemic mortgages, held on. Movement slowed. Inventory pinched. Berkshire County felt it, and so did Boston and Metro West. The fallout was the same across the state's patchwork: insufficient housing, expensive land, high building costs, amplified in a market already short of options. When people stay put, new options become scarcer still. So what's different now? Watch the Berkshires again, not as an outlier, but as an early clue. Months of supply, a core measure that estimates how many months it would take to sell all current listings at the current sales pace, has crept up to around 5 to 6 months in Berkshire County. Local veterans call 7 to 8 months the line of balance in that county, the point where neither buyers nor sellers dominate. They're not there yet, but 5 to 6 months marks a tangible shift from the pandemic squeeze. Price growth in the Berkshires has also cooled from a boil to a simmer. During the first 3 quarters of 2025, the average home price there was up 4% compared with the same period in 2024. That number matters. It says the market isn't collapsing, it's moderating. Negotiations that vanished during the frenzy have returned to the table. In Berkshire County, buyers are again negotiating on price and inspections, sometimes starting at or below asking and still securing a home. Pressure remains, but the posture has changed. Now widen the lens to the metros shaping the region's gravity. A national forecast for 2026 ranks Hartford as the top housing market nationwide, with Buffalo second, New York City third, Providence fourth, and Boston 7th. Those positions aren't just bragging rights. They're signals about competition, velocity, and affordability across state lines. Hartford's jump to number 1 came with data that's hard to ignore. Inventory there is 63% below pre-pandemic levels, deeper than any other large U.S. metro. Only 16.5% of listings in Hartford saw price cuts, one of the lowest shares among major metros. Home values in that metro grew 4.3% last year, faster than any other large market in the country, and homes moved with near frictionless speed, about a week on the market. Two-thirds of all homes in Hartford, roughly 66%, sold above asking. That's not a market warming up. That's a market running hot. But Hartford's price point still sits far below Boston's. In October 2025, one home value index placed Hartford's median home value at $380, $1,760. In the same month, Boston's home value index landed at $717,711, while Providence registered $503,409. Over the last year, Boston's home values rose by about 1.2% and Providence's by roughly 2.5%. Hartford outpaced them both in growth rate, yet remains more affordable on raw price, a split that could shape migration and bidding dynamics along the Interstate 84 and Interstate 95 corridors. This is where the causal chain gets real. Tight inventory meets pandemic-era rate lock-in. Locked-in owners reduce turnover. Reduced turnover squeezes choices. Squeezed choices drive bidding up in the most desirable zip codes. In Boston, that pressure turned into another stark measure of heat. Roughly 65% of homes in 2025 sold above list. When that share sits north of half, competition is not anecdotal. It's the structure of the market. Stack those numbers with the statewide medians, and you see a steady hand pulling prices upward. In Massachusetts, September's single-family median was $654,500. In October, the single-family median nudged higher to $660,000. Those two monthly medians are not the full story, but they show price discipline even as sales rose. 4.8% higher for single-family in September, 5.6% higher in October. In the same September comparison, new condo listings leapt 13.3% year over year, and condo inventory rose 5.1%. Those two condo metrics suggest a softening ahead for some multifamily segments if that trend holds, even as October condo sales dipped 1.1% year over year, and the median condo price increased to $549,900. Pushback west, and Berkshire County's cautionary lessons meet Massachusetts' structural realities. The state has long faced a shortage of housing, and the costs that come before a closing land acquisition and construction sit high. Buildable land is expensive. Building on that land costs more. The result is familiar. It costs more to bring each home to market. In tight times, that cost geometry makes quick relief harder. During the pandemic, low rates in the 3 to 4% range compressed monthly payments enough to fuel demand. When rates spiked after that window, owners held onto those ultra-low mortgages. The effect was a freeze in movement, just as chronic undersupply came due. You can see that freeze thawing, slowly, in the September and October numbers. New single-family listings statewide were 7.5% higher year over year in September. That uptick means more options for buyers than the fall of the prior year. But the same month also showed single-family inventory down 4.2% year over year, a reminder that while the door is opening, the room inside is still tight. By October, single-family closings rose again to $3,921, and the single-family median price ticked up to $660,000. None of this is a retreat. It's a measured forward step into a constricted corridor. Zoom into Boston proper and its close orbit. In 2025, roughly 65% of homes in the city closed above the asking price, a clear sign that the bid-ask spread favors the seller in many neighborhoods. That share sits alongside a chilly truth for affordability, a home value index of $717,711 for Boston in October 2025. Now contrast that with Providence's $503,409 and Hartford's $381,760 in the same month. The gap matters. It suggests why some buyers may chase value along the Providence commuter belt or even hop state lines toward Hartford, where inventory is leaner but baseline prices are lower. In Hartford, homes moved in about a week, and 66% sold above list momentum. That shows how quickly a lower price point can still kindle a bidding fire when supply is starved 63% below pre-pandemic norms. Yet Massachusetts is not just Boston and not just the Berkshires. It's Westwood's cul-de-sacs feeding into greater Boston's arteries. It's Cambridge and the lab-lined blocks of Middlesex County, bordered by the older stock in Worcester County and the coastal frames of Essex County. In those markets, even small changes in listings ripple outward. 7.5% more single-family listings in September statewide translates to showings booked, inspections scheduled, and contracts negotiated across dozens of communities. Sellers and agents have shifted tactics to Goldilocks pricing, just right list prices that meet the market instead of testing it. In September, that strategy had air behind it. Closed single-family sales up 4.8%, condo closings up 6.4%, median single-family prices up 4.7% year-over-year to $654,500, and condo medians up 1% to $525,000. In October, even as condo closings slipped 1.1%, the condo median pushed to $549,900, and single-family closings rose to $3,921. On the ground, that means two things at once. In many Boston neighborhoods, list low, sell high remains the shorthand. In Cambridge or Somerville, the habit of pre-inspections and waived contingencies may still appear when a home turns heads. But in Berkshire County, 5 to 6 months of supply signals a different beat. Leverage redistributing, inspections back in play, buyers daring to offer at or below list. Months of supply is not a metaphor. It's the runway left at the current takeoff pace, and in Berkshire County, local leaders still call 7 to 8 months a balanced runway. 5 to 6 months isn't balance. But it's not a cliff either. It's a glide toward normal. Now pull the camera back to the year ahead. One widely watched outlook calls for national home values to rise 1.7% in 2020, 6%, and mortgage rates to continue a gradual descent towards 6%. Those are not Massachusetts-specific predictions, but they matter here because of the lock-in effect. As rates drift down, each notch closer to 6% unlocks new sellers who couldn't imagine trading a pandemic-era loan in the 3 to 4% band for something meaningfully higher. The transition doesn't snap. It hums. Listings tick up. Price growth inches, not spikes. In September, Massachusetts showed a preview. New condo listings up 13.3% year-over-year. New single-family listings up 7.5%. If rates soften as projected, the Commonwealth could see that trend deepen through the spring and summer cycles. Competition will still set the narrative in Boston. With a home value index of $717,711 and roughly 65% of sales closing above list in 2025, energy there remains high. Yet the growth pace has cooled, about 1.2% year-over-year in Boston's home values, compared with Providence's roughly 2.5% and Hartford's 4.3% over the same frame. The lower absolute price point in Providence at $503,409 and Hartford at $381,760 gives those metros an affordability draw even as they heat. Hartford's 66% over-ask share and a time on market of about a week show that demand at those price levels can still outrun supply, especially when inventory sits 63% below pre-pandemic baselines and only 16.5% of listings take a price cut. Inside Massachusetts, that tension fosters adaptation. In Metro West and Concord, specialty builders and designers have leaned into high-end accessory dwelling units, ADUs, to expand use and value without moving. It's a micro-strategy, not a statewide cure, but it reflects the same math driving Berkshire negotiations and Boston bidding wars. If you can't find more house in your price range, make more house where you are. In Cambridge, across Middlesex County and parts of Worcester and Essex counties, agents have guided buyers and investors through renovations and rentals, threading deals in a landscape where listings rose 7.5% for single-family and 13.3% for condos year-over-year in September, but still fell short of a glut. Seasonal home ownership, short-term rentals, and investor activity add their own textures in Berkshire County. Each of those pressures tightens the open market pool for full-time residents. They're not unique to the county, but their footprint is bigger in regions where second homes dot lakefronts and mountain towns. Even so, Berkshire prices did not sag in 2025. They edged up 4% through the first three quarters versus the same stretch of 2024, while months of supply moved into the 5 to 6 range, with 7 to 8 months eyed as the balance point. That's a market cooling from the top, but still warm to the touch. Statewide, the autumn storyline reads consistent. In September, single-family closings up 4.8%. In October, up 5.6% to 3,921 transactions. Median single-family price in September at $654,500. In October, at $660,000. Condo medians at $525,000 in September, rising to $549,900 in October. Condo closed sales in September up 6.4%, in October down 1.1%. Single-family inventory in September 4.2% lower year over year. Condo inventory 5.1% higher. New single-family listings up 7.5%. New condo listings up 13.3%. These are the signposts of a market that's no longer in free sprint, but not standing still either. Overlay the regional competition, and you see how external heat fans internal flames. Hartford's #1 ranking for 2026, with 4.3% home value growth last year. A home value index of $380, $1,760 in October 2025. 66% of homes selling above asking, inventory 63% below pre-pandemic, and time on market of about a week. This is the profile of a metro where lower baseline prices don't guarantee easier buying. Providence stands just behind it in the forecast at #4, with a $503,409 home value index and 2.5% year-over-year gains. Boston, at #7, sits with the highest raw price point of the three at $717,000. $711 in October 2025, and the familiar competition marker, roughly 65% of homes selling above list. Each metro's stats paint a different path to heat. In Hartford and Providence, affordability plus scarcity. In Boston, desirability plus scarcity. In all three, scarcity holds the pen. So who's affected and how? Buyers in Boston feel it fastest. When roughly 65% of sales close above asking, offers have to be surgical. In Cambridge and Somerville, that can mean pre-inspections and escalation clauses. In Westwood and Metro West, it can mean touring on the first day and deciding the next. In Worcester County and Essex County, it can mean catching the wave early because list prices that match the market, Goldilocks pricing, draw a crowd. Sellers statewide see the other side of the coin, with closed sales up 4.8% for single-family in September and 5.6% in October, and median prices at $654,500 and $660,000 respectively. The window to list remains strong. Condo sellers face a more nuanced field. More new listings in September, a higher median in October at $549,900, but October closings down 1.1%. In those segments, time and pricing discipline matter more. In Berkshire County, first-time buyers and move-up families operate in that 5 to 6 months of supply bandwidth, where leverage is less lopsided than it was during the surge. Starting at or below asking can work again. Inspections are back in the room. Across the county, those negotiations sit next to a price reality, a 4% average price increase through the first 3 quarters of 2025 versus 2024. The surprise is not that prices rose. It's that they rose gently while months of supply grew. That pairing points to a landing rather than a drop. Meanwhile, the edges of the state pull and push. Providence at a $503,409 home value index, and Hartford at $381,760 create gravitational alternatives to Boston's $717,711. Yet both are running hot. In Hartford's case, homes moving in about a week, 66% closing above list, and inventory still 63% below pre-pandemic. In Providence, year-over-year home value growth of 2.5% suggests steady demand. If Massachusetts buyers can't stretch to Boston's medians, they may look south or west, but they won't necessarily find relief from competition. The terrain changes, the chase doesn't. Underneath, a quieter reshaping continues. In Concord and Metro West, high-end ADUs have emerged as tailored solutions, turnkey, purpose-built units adding living space and value without a for-sale listing. That approach thrives when moving feels impossible and building new subdivisions faces higher land and construction costs. In that sense, ADUs are not a trend, they are a symptom of scarcity, of price floors that resist breaking, of families choosing to reconfigure rather than relocate. Nothing about the next year is preordained, but the base case is sharpening. Expect Massachusetts to carry its current momentum, rising closed sales in September and October, steady to modest price gains at the median, and a measured increase in new listings compared to last fall, into the spring of 2026. If national rates drift towards 6% as projected, more locked-in owners will list, extending the September pattern where new single-family listings were up 7.5% and new condo listings were up 13.3% year-over-year. If that supply trickle persists, months of supply in places like Berkshire County could push from the current 5 to 6 months closer to the 7 to 8 months that locals call balance, with statewide medians climbing at low single-digit rates. There are risks to that path. First, watch inventory velocity. In September, single-family inventory was still 4.2% lower year-over-year, even as new listings rose. If new listings stall this winter or spring and statewide inventory keeps slipping, the fall's balanced pricing could give way to renewed bidding pressure, especially in Boston, where roughly 65% of sales already close above list. Second, monitor the cross-metro affordability gap. With Boston's home value index at $717,711, Providence at $503,409, and Hartford at $381,760, price differentials may keep shifting demand across borders. Hartford's 66% above ask share and a time on market of about a week, combined with inventory 63% below pre-pandemic, show how fast that market can absorb demand. If demand migrates, but supply there remains that tight, pressure may simply relocate rather than ease. There is also upside. If rates ease towards 6% and hold there, listings could multiply beyond September's 7.5% and 13.3% increases for single-family and condo new listings. If that happens through summer, statewide medians could rise moderately, more like Berkshire County's 4% through the first 3 quarters of 2025, while negotiation space widens in more markets. In that scenario, condo inventory could continue its 5.1% year-over-year rise from September, creating more breathing room for first-time buyers and downsizers in Greater Boston. Either way, discipline will matter. For sellers, that means pricing to the market rather than above it. September proved it when single-family median prices were $654,500 and condo medians were $525,000. Balanced list strategies delivered closings up 4.8% and 6.4% respectively. In October, with single-family closings at $3,921 and the median at $660,000, the pattern held. For buyers, it means moving quickly where the data screams urgency. Boston with roughly 65% of sales above list, and negotiating carefully where months of supply allow it. Berkshire County at 5 to 6 months with 7 to 8 months as the balance mark. The signals are clear enough to follow. Massachusetts housing is past the froth, but still firm. Statewide, sales are up 4.8% and 5.6% in September and October for single-family. Prices are edging $654,000, $500, and $660,000 at the single-family median. Condo dynamics are mixed. Inventory up 5.1% in September, new listings up 13.3%, October closings down 1.1%, and a median at $549,000. In the Berkshires, prices up 4% through the first 3 quarters of 2025, months of supply at 5 to 6, and balance at 7 to 8 in sight, but not here. Across the borders, Hartford runs at a week-long tempo with 66% of sales above ask and inventory 63% below pre-pandemic, while Providence holds at a $503,000. $409 home value index and 2.5% growth. Boston sits at $717,711 and roughly 65% above ask sales, evidence that desirability still outmuscles gravity. What comes next is a steady reel, not a plot twist. A national baseline of 1.7% home value growth in 2026 and a glide towards 6% mortgage rates would likely keep Massachusetts on its current track, competitive in Boston, cautiously more negotiable in the Berkshires, and widening in choice if new listings keep adding 7.5% and 13.3% year-over-year gains like September's print. The watch items are simple and specific. How many homes hit the market from winter into summer, and how close rates actually get to that 6% handle. Those two dials will set the rhythm, month by month, list by list, offer by offer. Wherever you are in the state, from Westwood to Cambridge to Pittsfield, read the local numbers, not just the headlines. Boston will keep lifting the top. Berkshire County will keep testing balance. Providence and Hartford will keep tugging at the edges. And if you're trying to time it, remember the market's new rules. Price to the present, move at the first good fit, and don't confuse deceleration with decline. If this brought the market into focus, stay with us for the next turn in the numbers.